Welcome. Accounting and Management Made Simple is your channel of choice where we break down complex and difficult accounting and management principles into simple, understandable concepts. Whether you are a student preparing yourself for exams or a professional looking to apply knowledge practically, this channel helps you to grasp and understand complex key topics with ease. Please subscribe, share, like, and comment. Thank you. Hello students. Today once more, I want us to study, I want us to solve past paper questions. I have taught in details about errors that affect the trial balance in a different video, and also errors that do not affect the trial balance in a different video. There are two videos that you need to listen to very well before we attempt the question that we are attempting today. Remember, although we teach those errors separately, we teach them separately to give you the intensity and understanding in the two areas. But when it comes to the past paper questions, they are tested together. They are all tested together. And for example, we have a question, December 2021, question 5A. By the way, these questions, you can download them online. If you just go to online and you say KASNEB, CPA1 Financial Accounting Past Papers. KASNEB, CPA1 Financial Accounting Past Papers. Pop! They will pop up within Chrome or whatever you are browsing, and you'll be able to download. And therefore, I don't see the need of showing you the questions. You can always get them online. So the question, by the way, even before we get into this, I want to urge you, please, if we are helping you, I want to urge you, kindly subscribe and hit the notification bell. Share so that anytime we are loading this kind of videos, you will be able to be informed on time. So the question, December 2021, question 5A. And I always tell students, please, you ignore theories at your own peril. Those who do KASNEB exams, I know we are dealing with students from across the globe. In Kenya, the accounting body that trains accountants is called KASNEB. But these kind of questions are tested almost across the globe by different examination bodies. So, for you, kindly subscribe, share, like, and hit the notification bell so that we will inform you about these questions. Now, the question, I want to repeat again. In KASNEB, those who do KASNEB examinations, you realize that more often than not, even in computational exams, between 25 and 30% of the marks are theory marks. You answer theory questions. And therefore, if you ignore theory questions, you will be already disadvantaging yourself, and therefore you may end up finding you are looking for your marks from 70% because you've already lost 30%. That's a bad beginning. Therefore, don't ignore theories. So December 2021, question 5A, there was a question asked. Highlight 4 types of errors that might not affect the trial balance. Highlight 5 types of errors that might not affect the trial balance. And you see the first one is an error of complete omission, where the debits and credits are completely omitted. Then we talked about the error of commission, where you post to the correct category but the wrong account. If it is debtors, you've posted to the wrong debtor, but you instead of posting to the right debtor. So both of the accounts relate to debtors, but you are posting to the wrong debtor. And number 3, the error of principal, where you post to the wrong account in the wrong category. For instance, where you are posting, instead of debiting an asset account, you debit an expenses account. Or instead of debiting expenses, you debiting an asset account. Those are 2 different categories. Assets and expenses are different categories. Then we have errors of original entry. If you enter 100,000 instead of 10,000, the debit and credit is 100,000 instead of 10,000, the error will not be disclosed. The error will not be disclosed because the debit and credit is the same amount, but it's the same amount, but is wrong. It is the same amount and it is wrong. Then we talked about the error of complete reversal. The account is supposed to debit, you have credited, and the account is supposed to credit, you debited. You have debited and credited, but the wrong account. It will not reveal in the trial balance. Then we talk about compensating errors. Compensating errors is where, in the course of you are doing double entry, debit and credit, debit and credit, debit and credit. You debit one with an error of 100,000 and you credit another one with an error of 100,000, it will still not reveal. And we say that there are ways of correcting all of them, and we explain to them. Then down, and in November 2019, question 1D, you are told, explain 3 types of errors that may cause the trial balance not to balance. The trial balance not to balance. And I gave a lot of them in that video. We talked about the casting errors. We talked about the error of when you carry the wrong amount to the trial balance, the casting of the T account, the casting of the trial balance. They are there in that video. Once again, please subscribe, like and share, and hit the notification bell. So quickly, I want us to go to this May 2018 question 5C. May 2018 question 5C. May 2018 question 5 what? C. So I want us to do a question which is May 2018 question 5 C. May 2018 question 5 what? C. May 2018 question 5C. You are told Tungane is a welfare club with an annual membership subscription fee of 200. The club statement of financial position as of that 1st of December 2017, which is presented below, failed to balance, and the difference was posted to the suspense account. The difference was posted to the suspense what? Account. So we have an account called suspense account. And I say that when the balance is material, in that other video, where I was talking about errors that are disclosed by the trial balance, we say when the balance is credit, we record it as a liability and it's material. When the balance is debit and it is material, we record it as other debtors. Therefore, in this particular case, it is recorded as a liability with 278,500. The balance is 278,500 per balance sheet. Balance per balance sheet is 278,500 because it is on the credit side. Because it's on the credit what? It's on the credit side. Then you are told, upon further investigation, the following matters are reviewed. Bar takings had been overcast by 115,000. 600 members had not been paid their subscription as of that 1st of December 2017. Depreciation for the pavilion amounting to 56,000 had not been provided for. A loan of 450,000 obtained from the bank was only recorded in the receipts and payments account. Repairs on the pavilion amounting to 135,000 had been capitalized. Number 6, bar creditors of 45,000 had been omitted from the creditors list. Number 7, a receipt of 5750 had been entered as payment in the receipts and payment account. Required journal entries to collect the above errors. Journal entry to collect the above errors. Please mark, you are told narrations are not required. If the statement narrations are not required, it's not there. You are supposed to do the journal entries and then give the narration. Then give the what? The narration. Let's go to the journal entries. Let's go to the what? We are told that bar takings had been overcast by. So we are being told that bar takings. Bar what? Bar takings. What are bar takings? Bar takings are the receipts. They are receipts of money from the bar. They are receipts of money from the what? Bar. And we are told that they have been overcast by 115,000. These are sales. These are sales. These are sales. They have been overcast by 115 what? So bar takings are bar sales. Bar takings are sales. We are told our sales had been overstated. So please mark that. It is only one account, the sales account. The sales what?
Account.
The sales account. The sales account. It is not the bank. It is the sales account. So, like I was saying, you're now able to realize that this one is affecting the trial balance because the sales are more than the collection. The sales are more than the what? Collections. And therefore, because it's an error that affects the trial balance, we say that we correct whatever was not done, it had been overcast. So the credits had been overcast with 115,000. So we debited to correct that. To collect that, we debited. But the corresponding entry cannot go to cash and bank because cash and bank was correctly done. The corresponding entry got suspense what? The suspense account. So we come here and we say we debit bar takings account, bar sales, bar takings account, reduce bar takings with 115,000 and we credit suspense account. We credit suspense what? We credit suspense what? Suspense account. We are told not to record to capture the narration. You're not told not to capture the narration. Number 2, we are told 600 members had not paid their subscriptions. We are told the subscription per member is 200. If 600 members had not paid the subscription and each of them should have paid 200, it means we have receivables amounting to 120,000. We have receivables amounting to 120,000 and they were completely omitted. They have not paid and therefore we never captured them anywhere. So now we capture them. Now we do what? We capture them. We debit subscriptions, arrears. We debit subscriptions and arrears. It's an asset, it's a receivable. Subscriptions, arrears, it is a what? It's a receivable. As we credit subscriptions income, as we credit subscriptions what? Income account 120,000. We have an income of 120 and we have an arrears of what? 120. We have a receivable of 120 and an income of 120. Then the next question we are told, depreciation for the pavilion amounting to 56,000 had not been provided. So we are saying that the debits and credits were not captured. We are told that the debits and credits were not captured. So this is an error of complete omission. This is an error of complete omission. Therefore, we just record it. Number 3, we debit depreciation expense account. Depreciation expense account of 56,000 as we credit provision for depreciation. Provision for depreciation account, 56 what? 56,000. We are told number 4 we are told a loan of 450,000 obtained from the bank was only recorded in the receipts and payments. We know that the receipts and payment is equivalent of bank. The receipts and payment is equivalent of what? Bank. It is the equivalent of bank. It is the equivalent of bank. And therefore we are told it was only recorded in the bank. So we received a loan. Instead of debiting bank 450 and crediting loan account, we only recorded bank. We only recorded what? Bank. We only recorded bank. We only recorded bank. And therefore, because we only recorded the debit, we not recorded the credit. This is an error that is affecting the trial balance. It is affecting the what? Trial balance. The trial balance. And therefore, whatever was not, remember my rule was, whatever was not recorded, of whatever was recorded wrongly, you record it. But the corresponding entry, you cannot change the bank because bank was correctly debited. You will take it to suspense. You take it to what? Suspense. So we will, we never recorded the loan, so we credit the loan account. We credit the loan account with what? 450,000, but we debit suspense. We debit what? Suspense. It is very important that you ask yourself, what was done. This is what was done. We only debited bank, we never credited loan. And because we only did a debit without a corresponding credit, the debits will be more in the trial balance than the credit. The debits will be more than in the trial balance than the what? The credit. And therefore, it is an error that affects the trial balance. An error that affects the trial balance, the corresponding entry, when you collect what was not done, so when we credit loan, we cannot debit bank. Because bank was debited, we now debit suspense. We now debit what? Suspense. We debit suspense. We debit suspense. Then you are told, repairs on the pavilion amounting to 135,000 had been capitalized. Repairs of the pavilion had been what? Capitalized. What are we told? We are told this way. We repaired pavilion. We repaired what? Pavilion. And we spent money. We spent money. Do you know what we did? We spent money amounting to 135,000. We spent money amounting to what? 135,000. Instead of debiting repairs, debiting repairs expenses account, instead of debiting repairs expenses account with 135, we debited pavilion. We debited an asset. We debited a what? Now this is an error of principle. This is an error of what? Principle. And therefore, we remove it where it was taken and we take it where it was supposed to be taken. It does not affect the suspense account. Why? Because it's an error of principle. The debits and credits were collected done. We credited bank which was correct, but instead of debiting pavilion, instead of debiting repairs expenses, we debited pavilion. We debited what? Pavilion. We recorded like we are buying an asset, but we are repairing. But we are doing what? Repairing. We are repairing. So we remove where we took it. We remove it from pavilion. We take it to the expenses. We remove it from pavilion, it was taken to be an asset, which is not an asset. So we remove it from pavilion by crediting pavilion as we debit repair expenses. So number 5. So we debit what? We debit repair expenses to record an increase in repair what? Expenses account with 135,000 as we credit pavilion, the asset. We are removing it from the asset account. We are removing it from the asset what? Account. It's an error of principle. It's an error of what? Principle. It's an error of principle. It's an error of principle. Then we are told, bar creditors, number 6, bar creditors of 45,000 had been omitted from the creditors list. The creditors were understated. The creditors were what? Understated. The creditors were what? Understated. So we correct the mistake. So we credit creditors. We credit what? Creditors. We credit creditors account to correct that mistake with 45,000. But that was the only mistake. The debit was not a problem. So we debit suspense account. We debit suspense account. Remember what we said? Where it is affecting to, where it's an error that was done in one account. We are told it's only the credit of bar creditors. Bar creditors had been omitted. Bar creditors of 45,000 had been omitted from the creditors list. So when we were doing our creditors, we understated our creditors. We understated our creditors with what? 45,000. So to correct this error, we credit creditors. We credit what? Creditors. But we are not talking about the debtors. The debtors has no problem. The debit has no problem. The debit has no problem. And because if we now debit again the account we were supposed to debit, we will be creating a problem where there was no problem. So we now debit suspense account. We debit the suspense what? Account. Then we are told, number 7, a receipt of 750 had been entered as payment in the receipts. So it's like this is a payment account. So it's like bank. It's like what? Bank. We are told a receipt of 750 had been entered. We received money, 5750. Instead of debiting here 5750, what did we do? We did something wrong. We did something what? Wrong. So we came and we reduced 57 what? we recorded, instead of increasing the money, we reduced our money. We reduced our what? So this is an error of complete reversal. It's an error of complete what? Yes. Reversal. So the first thing we said, when it's an error of complete reversal, the entries are two. The first thing, you debit bank with the 5750. You debit bank with the 5750, and then you are, by debiting, you are nullifying this. By debiting, you are reversing the wrong that was done. By debiting, you are reversing the wrong that was done, but you need to again debit it with the 5750, so that you can now increase bank. You can now increase what? Bank. So essentially, you think about debiting it, 0, 10, 5, 5, 10. So we are debiting bank with 101,500,000, but we credit suspense. We credit what?
Suspense.
So we debit bank and we credit suspense. We debit bank and we credit suspense. If you go to that video, I explained this very, 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 very well. An error of complete reversal. An error of complete reversal, we do two entries. An error of complete reversal, we do how many entries? We do two entries, and the account where the wrong was done, you record it twice. You record it what? Twice. So you debit cash and bank. You debit cash and bank with 101,500, 101,500, and then we credit suspense account. We credit suspense what? Account. 101,500. Listen. This question was this was the most tricky part of that question, because we said that an error of complete reversal is an error that does not cause the trial balance to balance. But in this particular case, this is an error of complete reversal, but there was one account where things were done correctly, but we are told it's only one account where things were done wrong. It's only one account where things were done wrong. We are told this way: a receipt of 750 had been entered as payment in the receipts and payment. In the cash book, we are told the problem was in the cash what? The problem was not in the receivables. The problem was not in the receivables. The problem was not in the receivable. The problem was in the cash book. So this particular case, we are told that the debiting of cash book was the problem, but the crediting was correctly done. The crediting was correctly what? Done. If even in the crediting it was done wrongly, we will not need to go to suspense account. We will not need to go to suspense what? Account. But here we are told that the crediting was correctly done, but in the bank account, something was done wrongly. Something was done wrongly. Some students will just look at it and say, okay, this is an error of complete reversal, and therefore I will still affect the receivables. No, that's the way to do it. That's the way to do it. By that, you have answered the first question. The requirement number two. Requirement number one, by these journals, you have answered the first question. The second question is the suspense account duly balance. The suspense account duly what? Balance. So you come to these entries and you find out the ones which were affecting the what? The suspense account. For instance, this suspense, we are crediting suspense account with 115,000. So we credit suspense account with 115,000, and we are saying it is through bar takings. It is through what?
Bar takings.
Bar takings account. This does not. There is no suspense account here. There is no suspense account here, but there is a suspense account. We debited with 450,000, and we are saying it is from loan account. It is from loan what?
Account.
Loan account. Loan account. Then this one, nothing. This one affects suspense account. We debit suspense with 45,000. And you say it's coming from what? Creditors. It's coming from creditors account. Then this one, we credit suspense with 101. We credit suspense with 101,500. And it is coming from Bank. It's coming from what?
Bank.
Now, we add the two and we find if the suspense account has a zero balance. If it has a zero balance, this is 495,000. If it has a zero balance, then it means we have resolved our errors. We have dealt with our errors. The other one is 278,500, 278,500 plus 115, 123 plus 101,500. We get a figure of 495,000. By so doing, we are saying that we have resolved our suspense account. Our suspense account has a balance of zero, and therefore the errors have been corrected. The errors have been what?
Corrected.
Then you are told finally to prepare the statement of adjusted surplus. The statement of adjusted what? Surplus. I want to repeat again. Once you do your adjustment, once you do your what? Adjustment, you go to the suspense account and you post anything that is affecting the suspense account, you take it there. Whatever is not affecting suspense. Remember they say that although we were teaching errors in two classes, we were teaching errors to help somebody to understand. But when it comes to the exams, there are some errors that will be recorded that affect the trial balance and errors that do not affect the what? The trial balance. And therefore, you need to decode which errors we are dealing with. You need to decode which errors we are dealing with. Now, you go through your journal entries, and the errors that are affecting the suspense account, you record them in the suspense account. You record them in the suspense what? Account. You record them in suspense account. I want to repeat again, we really need your support. We really need your help so that we continue doing the work we are doing. Kindly, I want to urge you, share, like, subscribe, and hit the notification bell so that every time we are having this kind of videos, we are able to inform you and you are supporting us. Thank you very, very much for the support. Now, from there, you are supposed to prepare, you are told to prepare the statement of adjusted surplus. The statement of adjusted what? Surplus. You know, this question was just twisted a bit. Instead of bringing us the income statement of a trading firm, you have now been given the income and expenditure account of a non-profit making organization. But the principles are the same. Whether the errors were committed by a non-trading organization or by a trading organization, the principles are the same. But in non-trading organization, we do not talk about profit. We talk about surplus of income over expenditure. We talk about surplus of income over what? Over expenditure. And therefore, we are told to prepare a statement of an adjusted statement of surplus of income over expenditure. An adjusted statement of surplus of income over expenditure. Statement of adjusted surplus. Statement of adjusted what? Surplus. The firm is called Tuungane. We are saying Tuungane statement of adjusted surplus for the year ended December 2017. Now, we say, as you prepare the statement of adjusted surplus, again you look at your journal entries, the changes that you are making, and you ask yourself, if these entries were done, would they increase our profit or would they reduce our profit? If they increase, you add back. If they would reduce, you subtract. So we say surplus per the balance sheet. If you look at the balance sheet, the surplus for the period was 141,400. Surplus per the balance sheet 141,400. 141,400. 141 for what?
100.
And it is shillings. Yeah, it's actually shillings. It's actually shillings. So we look at them and ask ourselves, what is the impact? If we never made these mistakes, would we be increasing our profit or would we be decreasing? Bar takings, these are sales. These are what?
Sales.
Sales. Now we are reducing our sales. We are reducing our what?
Sales.
We are sales. So we say less because this sales should not have been there. This sales should not have been where?
Yeah.
The sales should not have been there. So we subtract. We subtract bar takings. We subtract what?
Bar takings.
We are debiting bar takings. We are debiting bar takings. So we subtract bar takings. We subtract what?
Bar takings.
We subtract bar takings by 115,000. We subtract bar takings with
115.
bar takings. We are reducing our sales with 115,000. We are reducing our sales with 115 or what? Thousands. Maybe we remove that to get enough space. So, then we look at this depreciation expense. What does depreciation do? It reduces our profit. It reduces our what? So again we subtract. We subtract depreciation because it is increasing in 56,000. We subtract what we should have subtracted. We subtract what we should have done what? Subtracted. Loan has nothing to do with the profit. Repairs, we have additional repairs. So we had never deducted 135, so we now deduct. We now deduct our repairs 135,000. We deduct repairs of 135 what? Thousands. Then, because we never deducted, now we deduct. Now we do what?
Deduct.
Now, creditors has nothing to do with the income statement. Cash at the bank has nothing to do with the income statement. But remember, we had incomes. We had incomes, additional information number 2. We had incomes, number 2, 600 members had not paid their subscriptions as the 31st of December 2017. There is an income which was omitted. Add subscriptions income. Add subscriptions income omitted of 120. We had subscription income omitted of how much? 120. 120. So we add them up, we get 261,400. 261,400. Then we subtract whatever is supposed to less, 115 plus 56 plus 135. We are supposed to deduct 306. We're supposed to deduct what?
306.
306,000. So we get our adjusted surplus minus 261, 400. So we even have a deficit. 261.4. We have two other questions which we have solved. We have two other questions which we have solved. Look within our channel and you'll be able to get those two answers so that you can do practice. Practice makes accountants. I always tell my students that practice does not make perfect. In accounting we say practice makes accountants. Practice makes accountants. It is when you do it over and over and over again that you realize that you're able to decode and detect every one of the examiner's trap. When you do practice, you become a very refined accountant. Once again, share, subscribe, like, and hit the notification bell so that every time we are loading this kind of videos, we will be notifying you and you'll be encouraging us. You'll be encouraging us. If we are doing something good, call your friends, call your neighbors, call the others who are studying this particular subject, and you will be a great encouragement to us. Thank you very much.